Euro dollar daily forecast, June 11th, FXEmpire.com. The euro dollar pair continued to be the focus of everyone in the Forex world on Friday. The pair features a currency that many think won't even exist in a couple of years, and as a result, there's an extraordinarily large amount of volatility in this market lately. The session for Friday was mainly bearish, but there was also the usual short covering for the weekend as traders mull the possibility of some kind of bailout in Europe. This has been the case for some time now, but the rumors are flying around the markets at this point in time because of a supposed plan in the works to recapitalize Spanish banks. This would be a huge boon for the pair initially, but one would have to think that all of the attention will be turned towards the Greek elections next Sunday, sooner or later. The 125 level proved to be somewhat supportive on Friday, but the reality is there's a lot of things that can happen over the weekend. Because of this, we have a lot of suspicion with this rally, and as a result, we still can't buy the euro. Besides, there's a huge chance that any rally gets faded because of the previously mentioned Greek elections. Concerns aren't necessarily about Greece leaving the European Union, more like whether or not it will be orderly. And if they vote the anti-austerity power in next Sunday, it will not be orderly. The 126 level did prove to be resistive over this past week, and we think it should, for the most part, continue to be. Over the weekend, the Chinese are also releasing a slew of economic numbers, so that could move this pair in the open as well. There is open speculation that the numbers could be poor as they cut interest rates earlier this week. This means that shocks are still possible from different directions, something that is never good for the risk trade. All of this information does make predicting movements in this currency pair difficult at this point, but the odds are that by the end of the week we will see that sell-off nonetheless. Because of this, we are much more comfortable buying dollars at this point and therefore shorting this pair. If the pair does rally, we are willing to fade it. If it gaps down on Monday morning in Asia, we are more than willing to sell then as well.